Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 8th of August. Stellar US jobs report for July boosts the dollar. The US labor market posted a second consecutive month of stellar employment gains in July. Non-farm payrolls rose 255K, exceeding by far the forecast of 180K, while June's figure was revised even higher to 292K from 287K. Average hourly earnings accelerated in monthly terms, something that kept the yearly rate unchanged at 2.6%. The unemployment rate held steady at 4.9% against expectations of a decline to 4.8%. However, this was only because the labor force participation rate jumped. The dollar strengthened against its major counterparts on the news as the robust jobs reports eased some concerns over the underlying momentum of the US economy, which arose following the disappointing GDP print for the second quarter. This was also evident by the rally in US equities after the report was released. Moving forward, we believe that market focus is likely to remain on incoming US data, as well as speeches by FOMC officials, which can help investors gauge the likelihood for a rate hike this year. Even though the Fed could opt to remain on hold in coming months while it monitors any potential Brexit effects on the US, we maintain our call that both September and December remain live meetings for a Fed funds rate increase. The market reaction to the UK referendum has so far been calmer than expected. The FOMC kept the door open for a rate hike this year in its July statement despite Brexit, and US economic data are showing improvement. In our view, continued strength in US indicators over the coming weeks could lead to a material repricing of market expectations for a near-term hike, something that could keep the dollar in demand. With regards to forward guidance, the most important forthcoming event may be Chair Yellen's speech at the Jackson Hole Economic Symposium in late August. As with her speech at the Economic Club of New York in March, the Fed chief could provide clear signals on whether she considers a hike to be appropriate in 2016 and what the committee would need to see before taking action. As for today, we have a particularly light calendar without any major events or indicators due to be released. As for the rest of the week, on Tuesday, China's CPI and PPI data for July are due out. The CPI is expected to have slowed somewhat, while the PPI is forecast to have continued falling, but at a much slower pace than previously. From the UK, we get industrial production for June. Wednesday's calendar is very light with no major indicators coming out. On Thursday, the spotlight will be on the RBNZ policy meeting. The forecast is for the Reserve Bank to reduce its benchmark interest rate by 25 basis points to 2%. A rate cut is also supported by market pricing, with the implied probability for such a move currently at 84%. The bank was reluctant to cut rates at the last two meetings, as lower rates could have inflated even further the nation's elevated house prices, thereby risking financial instability. That obstacle is now gone, with Governor Wheeler announcing plans to tighten restrictions on home lending. A few hours after the RBNZ decision, we get China's industrial production, fixed asset investment, and retail sales all for July. All these indicators are expected to have slowed somewhat on a yearly basis, so further softness in Chinese data could raise the likelihood for a rate reduction by the People's Bank of China in the foreseeable future. Finally, on Friday, from the US, we get retail sales for July, and the forecast is for a slowdown, but nevertheless still a healthy pace. From Eurozone, we get the preliminary estimate of GDP for the second quarter. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.